Richard, thank you for your time. So when I began this program earlier on, I began by counting the number of words that were delivered by Gareth Ackerman at that results presentation today. In my head, I was thinking unprecedented, 1,766 words. And then I read a little deeper, and some of the words that he was using, you got the sense of a man who was extremely pleased with the work that his management had done. I want to quote two sentences from him. He says, quote, "This has been an exceptional performance." And then secondly, he says, importantly, we have delivered a compound annual growth in dividends declared of 20.2% over the last 5 years. It's of course 5 years that you yourself have been in charge. So I can only imagine you must have been swirling with happiness when that judgment was delivered. Was the chairman going a little bit overboard considering the share price on the day ended down 3.8%? What was he alluding to?
Well, look, it's been a good day for Pick and Pay. I mean, I can't speak to the markets. Sometimes people take profit because they're pleased with the business and it affects the share price. I don't think it was a particularly high volume day, so I read very little into this in the share price. All that we've done over the last 6 years now is do a better job for customers, make sure that we invest behind our proposition. And I think that the year that we had was very, I said I was very pleased with it. The chairman was pleased with it. I think our staff are pleased with it. And clearly, given that we grew market share for the entire year, we increased our profits by 18% on a 52-52 basis, and we gave our shareholders a 22% increase in their dividend. I think all in all, people end the day happy, and we look forward to improving on it in the coming year.
Yeah, I want to understand what you were particularly pleased with during the year, but I also wanted to understand where you are in terms of that market share.
Well, I think if you look at the report that we put out, and we obviously publish it for all the analysts in the markets, you've seen that actually we've grown our market share for the last 12 months. And I think that would be acknowledged and recognised by most market commentators. We've grown our turnover by 7.1% in a difficult market, and you've seen some of the other performances from the retail sector have fared slightly less well. And I think that it's a combination of factors. One is the work we've been doing over the 5 or 6 years that the chairman referred to, but also importantly, it's to do with the fact that our Boxer business has become a much stronger and important part of our group. And our retail business has been improved for customers through investing in price and promotions in the last 12 months.
Yeah, I want to talk about that strategy shortly, but I wanted to understand if there's a target for that market share.
Not really. I think the truth is it's in the hands of customers. I mean, we always want to, like we're all quite competitive, so we'd like to win rather than lose. We don't have an ambition to try and be the biggest. We just want to try and be the best. And I think given the group's had a history of being one of the better retailers in the country, I feel like we're getting back to form. And that's been by following a plan over the last 6 years since I've been here. Yeah. That means that we steadily improve each year. And that's what we've to announce that we've managed to do for the 6th year on the road.
Yeah, one of the highlights that you highlighted for the year that's just gone by is around containing prices, and then of course lower prices that you were offering to your customers. Then you also spoke about the work that you are doing at Boxer and the potential for Boxer to grow forward. So 2 questions on that front: sustainability of that strategy going forward, and also just how big a potential is there for Boxer going forward?
Well, I think there's a potential for all parts of the group. I mean, we've only got 10% of what we perceive to be the size of the market. So I think there's a lot of blank space out there for us to try and fill in. I think the thing that's nice about Boxer is that it's a company that's been around 40 years. And in recent years, they've refined their format. It doesn't have the high racking. It was a bit dark and a bit dull a few years back, and the management team have modernised that business now, and it's now a very effective and efficient limited range discounter in the space. So we've turned it into a national brand, and now we find ourselves in all of the regions, and therefore I think their growth potential is quite high.
Yeah. So I saw a little line in the presentation that you made, as well as the results, of course, to the stock exchange, that spoke about a store being built in Nigeria. And I said, aha, is this the beginning that we've been waiting for? Talk to me about the strategy outside South Africa and, of course, the performance of those African stores, which wasn't so good this time round.
Yeah, the rest of Africa was a bit tougher. I mean, we had devaluation of the currency in Zimbabwe, and the economy in Zambia has been struggling, but we still made 240 million rand of profit out of our African business, and it still remains around about 10% of our group. So important, but not dramatic. And we've been exploring Nigeria for the last 3 or 4 years, and I think we want to learn by doing. So we're going to open a store probably before the end of this calendar year, and I think it's going to be an exciting departure for the group. We've not been as far as West Africa before, and I think we'll learn a lot by what I think will be quite an innovative format when it opens.
Yeah, I want to understand the strategy there, and I want to understand if there's any huge amount. You know, as journalists, we like big numbers. The capex spend on that African expansion, I'm beginning to call it, because I'm thinking if you're going into Nigeria, surely you then have to talk about getting into Kenya. You must talk about getting into Ethiopia. 100 million people. What are you waiting for, Richard?
I don't know. I don't know what I've been doing for the last 6 years. Look, I think that's the fun thing here is the fact that there's lots of opportunity. I mean, you know, Nigeria's got the best part of 200 million people. 95% of the market is supplied by traditional retailing, which is a very powerful format, but actually modern retail has a role to play. And I think we can be a meaningful part of that. I mean, it's definitely the rest of my career and someone else's. So it's the start of something rather than it's going to be a sort of a massive expansion overnight. But we're an African firm with an African future, and you know, slow and steady wins that race rather than dramatic. We're not betting the farm. We're just going to learn. And in West Africa and East Africa, we're always alert to opportunities.
Happy man, happy times. Richard Brasher, CEO, Pick n Pay.